All right, folks, we are back. Market open. Sorry, market close. This needs to be the default mic. I don't know why the MacBook mic is always the default, but yeah, I decided to stream because we got a market to close. Ton of stuff to discuss. We have a bunch of earnings coming out as well, so I was like, you know what, we might as well go live to talk about all those earnings because there's a ton of stuff going on. We can discuss PayPal. I can answer questions, stuff like that. And I think it's worth going live. Also, my girlfriend told me that I should probably go live when I asked her, hey, do you think I should go live? And she was like, yeah, babe, you should probably go live because like the people want you to go live. So shout out to that nice little butterfly in the chat, Kelly, for telling me to go live. But no, in general, I think there is a lot of stuff to discuss. IBM is at decade-long highs, which is, I saw that like 2 hours ago, and I was like, that's ridiculous. PayPal is at decade-long lows after an event, so we're going to talk about that. And then you got Tesla. We got, there's a little bit of beef in the Tesla community that I have inserted myself in. And kind of love it. I kind of love this. This is kind of great. So we got a lot to talk about. So, why not? Why not go live? And then, I love this shit. You guys know I love this shit. So yeah, I mean, like this is basically a news channel all day, and we got multiple shows to go live every single day. So Daniel says, thank you, Amit, thanks for saving me from a burning building, Amit. Thank you for being here, Daniel. I appreciate it. Intel earnings. We got Intel. Thanks for lifting that car off me. We got a bunch to discuss. Intel, yes. Since when did I spend so much time listening to Amit? Ashwin, dude, you spent so much time listening to me because I kept going live, which is why I'm live on the market close, folks. Thank you to the 42 people that are here on Twitter and the, I guess, 120 that are here on YouTube. And yeah, we're going to discuss all this market close stuff and a variety of different things that are going on in the stock market. I bought a crap ton of Robinhood today, guys. I bought like 40 contracts. January 2025, $25 call. It's down 17% today. So I don't, Robinhood's at 1071 right now. I don't think we are seeing 1030 on Robinhood, which would be like, I think that was the spot where we got to when we had that run up. I'm trying to buy the contracts that I bought back in back in December, and they won't fill. Like, it tells me the price is at the price where I want to fill, but it won't fill because like it's just like not getting there. And that tells me that there's a ton of support, at least on the option side, for certain price levels that I'm looking at. But on the January 2025 price level, there was no support today. So I was like, all right, that was the time to bet on it. So that's the buying that I did today. And we'll talk about that and talk about a bunch of other stuff. Seymour Duck, Austin Smith, Joshua Thomas, Carl was thinking the same, hoping you would. Love the market close. Carl, thank you for being here. Thank you for everyone being here. It means the absolute world to me. This is what I love to do, quite frankly. And that's another reason I decided to do the market close. The only reason I wasn't going to do it is because I just did the PayPal stream. So I was like, oh, people just saw me for PayPal. Do we really need to go live again? But then I realized, there's a lot of stuff to talk about. I love going live. And part of doing this job is, can you make things interesting and exciting? Can you entertain? Essentially, you're an entertainer that hopefully can add some value, regardless of what's happening in the world. And so if that's a part of the job, then, that's a part of the job that I'm going to take up. David, John, Austin Smith, I may need to do an 8-hour live stream, market open to close, and have guests on periodically throughout the day. That would be an awesome idea, basically replacing CNBC. Maybe one day we get that big, but we got to see if we can do that one day. Van Hoffa, Shintoki, Namir, Ray, Chris James. All right. Thank you all for being here. Midwest, love you. Thank you for being here. So also I wanted to go live because Tesla's down 12%. And I was like, you know what? We should probably come together as a community and try to discuss all this Tesla stuff that's going on. Okay. We got 5 minutes till market close. Let's look at the equities. I guess all the topics I have, I'll discuss after market close because I got a bunch of stuff to run through. And we can just look at some equities for the next 5 minutes. And then we'll talk about the docket. What we have on the docket, we're going to talk about the Tesla beef that I got involved in today. That I think is very beneficial for my career. But we'll discuss that, especially because I think I'm fucking right, dude. I think I'm right. I went up against, what's that line that J. Cole says? You go up against the what does he call them? Goliath or something? Like, you go up against the gods, essentially. I went up against the gods today. And I think I won. Now, he has more followers than me, so he'll get more likes, but I think I personally won. So Tesla beef. Then we'll talk about PayPal and the egregious event they had today. Granted, the stock selling off was stupid, so I think the event was good, but the presentation of it was bad. We'll talk about that. Then we'll talk about Intel earnings. We'll talk about IBM earnings that happened yesterday. The stock's at a 2011 level high. Is this a AI play that is hidden that we haven't talked about before? And we'll talk about a couple of other companies that are doing earnings as well. And then obviously, we'll discuss Tesla price action. I have not DCA'd into Tesla. I'm not touching that thing yet. We're going to wait a little bit before we touch that. What was the news about PayPal? Again, the reason it's selling off is because the event wasn't assumed to be that exciting by investors. I think the sell-off is so stupid right now, dude. Nothing they said is a reason to sell off the stock. Like, you would think when there's a sell-off, there's bad news. There was no bad news today. This is just like dumb, in my opinion. And so I didn't buy the dip today. 58-ish, 57-ish. I think I get more excited to buy the dip, not 59 or 60. But it definitely didn't warrant to me a massive sell-off to see when it comes to PayPal. Okay, so Didi says, "Oh my lord, Amit, I thought you weren't going to do a live closing. You by far are the hardest working person that I know." I appreciate that, Didi, especially as someone who thinks I need to work even harder. That means a lot to me. But yeah, going live is fun. So I kind of just like, why wouldn't we? We got more stuff to talk about. Let's keep doing it. By the way, Didi is what I call my sister. In Hindi, in India, your older sister is Didi. So her name is Shagun, which means, I think it means good luck in Hindi, Shagun. But I call her Didi. I haven't called her Shagun ever. So Didi is very special to me because I've literally called her Didi for like 26 years. So, okay. Let's look at a bunch of different stocks we have, and then we'll have market close in 3 minutes. SoFi's up about 1% for the day. Netflix about 3.6%. SLG killing it at about 3%. Really, really nice move on SLG. Alibaba's down about 1.78%. TFC, Truist, 37.52. Celsius is up just a little bit today. Google as well, absolutely killing it. I'll show you guys my Google and my Truist positions. I tweeted them today. So if you're on Twitter, you saw them. But if you weren't on Twitter, I'll show you guys after the market close. Google doing great. Google's doing great. 153. Dude, that dipped to 120 in October when they missed on cloud by like a couple $1,000,000. That was a hell of a dip to buy. And I was already loaded by then, and I really didn't have dry powder, so I didn't load up. So, I could have reduced the average, but whatever. But that, for those that did take advantage of that, that was great. You're up $30 since then. You're up there, and really, you have to do nothing other than just let Google be Google. The whole ChatGPT narrative, that's not really, maybe it'll play out in a couple of years, but right now, for the next 6-7 months, that really doesn't matter. SMCI 475, AMD 180. Wow, AMD's 180. I didn't see that. It got to 184. Wow. Okay. Amazon 157, Verizon 42. Verizon's up another 2.2% today. That's amazing. Snowflake 205, Disney 94. Palantir selling off a little bit, down 1.7%. Nothing really fundamental for why it's selling off, kind of just more macro stuff. But Palantir is selling off as well. Dale says 3 streams. That boy in his grind for real 2024 going to be huge. Dude, we have another stream at 6 to 7. I'm starting a semiconductor podcast with my boy Jose. And so for those that care about NVIDIA and semis, we're going to be discussing a ton of that stuff there. We were supposed to do it last week, but that was in California. So I got all that stuff. But yeah, today's a 4-stream day. So 6 o'clock we'll be live again. The ChatGPT dip that took Google to 100-ish was amazing. Yes. And what's his name? Bill Ackman loaded the crap up when that happened. So, and he talked publicly about how the ChatGPT, basically threat wasn't really a threat, but that got him some cheap shares. MNOP says Google 260 shares with a 107 average. Not bad at all. ET says Amit's going to be doing sleep streams soon at this rate. Eventually. But dude, there's people that watch people sleep. I don't do that. Maybe I don't want to admit to that, but there is a market for that content. All right, folks. June. You got me in the chat thinking it's June. January 25th, 4 p.m. What a day in the stock market. But now it's closed. All right, there we go. We're done today in the stock market, but we have a lot to discuss in terms of what's going on in the stock market. So let me just pull up one thing real quick. Okay, so let's do this and let's do this. Cool. Okay, so let's go through some prices real quick, and then we'll get into the host of topics we have to talk about. So Palantir 1646 ends out 1.67% of the day. Robinhood basically flat, down about 1% on the day. Tesla 182. We'll talk about them, down 12% on the day. Monster decline on Tesla. We'll talk about that. PayPal down 3.67% of the day. Netflix is green, up another 3% after a monster earnings. Nvidia is green. $616, up about 0.42%. KRE down a little bit. We'll maybe talk about the banking fund program thing that the Fed talked about. We talked about it in the market open, but overall seemed pretty bullish. A lot of people thought banks would fall today, and I thought they would fall last night, but banks actually were like, no, this is actually really good for us. It's not that bad. Truist is up. Celsius is up a little bit. Microsoft is up 404. Google 153. CleanSpark is up. The Bitcoin miners, I think, actually had a good day. Yeah, pretty much all of them. Look at that. Hut 8 Mining was up 17% on the day. They had the short report come out on them. So if you got the bottom, I think around 580, you've done really well on that. MicroStrategy is up 1%. Bitcoin trying to get to that $40,000 range. Coinbase had a day, kind of flat. Riot was up 5% as well. Mag 7 did well. Google, Meta, Microsoft, Apple at 194. They're flat for the day, down 0.17%. And then obviously Tesla was the worst performer, down 12% on the day. Overall, not a horrible day, but definitely not an amazing day either. Quickly, I want to look at Intel. We're going to go through their numbers later, but I just want to look at their stock right now. Intel is, remember, Intel's is, oh, wow, they're down 6% after hours. Oof, I guess they had a bad earnings. Let me pull up their numbers real quick. Intel went up from 25 to like 54 last year, I think, or 47 last year. It was almost a double. And so Intel investors actually, people thought Intel was a value trap at 25, but a lot of people took advantage of it, and they did well. But the problem is now is Intel actually a value trap? Because I mean, it's one of those companies that, again, it's paid a dividend for a long time, really hasn't shown massive growth, and people like it because it's safe. But how safe is it? So here are the numbers. Let's just look at them real quick, bird's eye view, and then we'll go deeper into that. Okay, Intel fourth quarter results. This is important for semis. Fourth quarter revenue was $15 billion, up 10% year over year. Full year revenue was $54 billion. Oh shit! Wow, revenue is down 14% year over year. That's a tough one to swallow. I mean, I'm sure the street was expecting that, or at least something close to that. But 14% year over year is crazy in a world where AMD, NVIDIA, ASML, SMCI are growing plus 70, 80% year over year. I know Intel is not exactly the same. I get it, but it's lumped into that sector. First quarter 2024 revenue of $12.2 billion. Oh, that's not good, guys. Fourth quarter revenue was $15 billion. Their guidance is $12.2 to $13.2 billion. So they're going to decline quarter over quarter. I mean, which means TTM, they're definitely going to decline next year unless they have some massive growth in second or third quarter, which is probably not happening. Intel EPS was 63 cents. I don't know what street expectations are, but right now the stock is plummeting. The stock is down 7%. Yeah, I mean, like that, investors definitely weren't happy with it. Now it could be worse, but I mean, investors did not like this so far. CEO Pat Gelsinger says, "We delivered strong Q4 results, surpassing expectation for the fourth consecutive quarter. Revenue tapped at higher end of our guidance. The quarter capped a year of tremendous progress on Intel's transformation, where we consistently drove execution, yada, 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 yada." Okay, so we're executing. CFO said, "We continue to drive operational efficiencies in the fourth quarter and comfortably achieved our commitment to deliver $3 billion in cost savings in 2023. I've heard some analysts think Intel can get to 450 over the next 10 years. I know that sounds crazy to say, but there are a bunch of people that say this is something that's incredibly slept on by Wall Street because it's not about growth. It's about their cost cutting and then eventual growth given the sort of AI chips revolution. But I don't know if I see that with Intel. That's a tough one. AMD's eating Intel lunch. Yeah, I think a lot. So I don't think these guys are necessarily eating their lunch in the fact that Intel's irrelevant. I mean, you're doing $15 billion a quarter, $60 billion a year, and you're not irrelevant. Intel chips are still used in thousands and thousands of hardware devices worldwide, especially computers. But you are not growing at the level of an AMD or SMCI or a NVIDIA. I mean, you're not providing the GPU infrastructure for the entire world or the CPU infrastructure. You're definitely providing parts of it, but you're not in terms of, you're not the hot girl in the group of friends. I'm sorry. You're just not, right? And so from that perspective, you're going to get a boyfriend, but you're not going to get the football player. He's not going to want to go after you. It's just like, you're not the hot cheerleader. Nonetheless, in the context of Intel, again, they rebounded really nicely. If you see them from last year, let's just do the 5-year on them. So it got to 2371 October 2022. And then 2023, around March, it was still $25. This is when ChatGPT went mainstream. And then by the end of the year, it hit 51. Yeah, so it went from 23 to 51. So not quite a double, because 23 times 2 is, oh no, it's more than double. Sorry, it's more than, yeah. So it more than doubled, which is not bad. Right now at $46, down 5%, not that crazy. But now the question is there room for this thing to go higher? Remember, if you look at the max chart on Intel, 63 is their max, and they got to 51, after falling pretty aggressively. Now you see this V shape. They were here for a long time, and then they just fell in 2023 when the market fell, but they recovered. Question is now is the growth still there to get there? You're not the Namir in the group. Namir, you're so egotistical about your looks, dude. You think you're all that. Okay, let's talk about Tesla. So that was Intel earnings. We'll go deeper into them in a little bit. But let's talk about Tesla. Let's talk about a little bit of the beef that I got in today. Okay. And then we'll talk about the stock price. And the question I have for everybody is, did you buy the dip today? Let me know in the chat if you bought the dip. So what is the beef going on with me and some members of this wonderful community in the context of Tesla? Well, Elon yesterday on the earnings call explicitly said that Dojo is a long shot and it's likely not going to work. Members of the Tesla community that are uber bulls, like the Sawyer Merritts of the world, like the, Dan Ives of the world, he's one, Kathy Woods of the world, they have been touting, Adam Jonas, that Dojo is a part of their thesis and it factors into the valuation. All I said was, wait a second. Yesterday was the first time I ever heard Elon Musk genuinely say, hey, it's probably not going to happen. And we should be pretty skeptical about it. So last night, and it wasn't just me, because I made sure with the chat, wasn't just me. I had 500 people in the chat. All of them were just like, we could not believe that Elon said this last night. Okay. I tweeted this last night. This tweet has 360,000 views. I said, Elon just said Dojo is a long shot and has a low probability of success. I have never heard him say this before. That's not really an opinion. That's just a matter of fact. I've never heard him say something like this before. Then Sawyer Merritt, this dude with like 600,000 followers. Okay. I don't know if you know this guy, but this guy's like big in the Tesla community. I'm sure you guys know this guy. Big Tesla dude. He comments and he quotes tweet me. And that quote tweet got 270,000 views itself. And then he says, Elon Musk on the Tesla earnings call 1 year ago, I'd look at Dojo as a very long shot bet, but if it's a long shot bet that pays off, it will pay off in a very, very big way. And then I respond to Mr. Sawyer Merritt. And I'm not going to go through my entire response, but the gist of my response was like, look, you're being misleading here because you are trying to defend your ass right now. And I get it. I understand, Tesla's your stock. You got to do it. I don't blame you for that. But you're trying to cover up your bullishness and other Tesla big bulls bullishness for the Dojo being part of the bull case, being part of the valuation. ARK said it could be worth 20 trillion, right? So like this was a real thing that a lot of people thought about. Simply by saying, oh, Elon said it's not probable before. That's not what Elon said. Elon saying it's a long shot 2 quarters ago for a couple seconds is not the same as him spending 5 minutes yesterday basically telling investors to really think carefully when it comes to Dojo and to not get their hopes super, super excited about it. And I said, that's misleading to me. I said, that's incredibly misleading for me because you're trying to say that Elon said this before, but he's not said this before. He's absolutely not said this before. And I think a lot of the Tesla bulls are so unobjective when it comes to, defending Elon's every last word that they have. And this is not the first guy. So this is the other lady, some boomer house lady, a Tesla boomer mother, whatever her name is. All the respect in the world for her, but she's trying to say, no, Amit, you're wrong. He said it before. It's like, dude, perception is reality. It's not about if he said the stock's down 12% for a reason. It's not that he said it before. It's that the implication of Dojo, which is their way of vertically integrating compute so that they don't have to pay billions to NVIDIA, which decreases CapEx and increases operating margins, basically fell to shit yesterday in terms of that thesis. It's not that Dojo's not going to be used. It's that the bull case was that they don't need to rely on NVIDIA as much as they're relying on right now. The NVIDIA bull case was heightened today when Elon said, hey, we're probably not going to be using it as much as we think we're going to use it. And that's where I was like, I think that a lot of Tesla shareholders are not taking this as seriously. Now, granted, does this really matter long-term? Probably not. But it is just funny getting involved in this beef because you've got people with, dude, when you have a 600,000 following account and you quote tweet me, you're obviously trying to dunk on me and you're basically trying to rile up all your minions that think Tesla's going to sell 20 million cars by 2030 to go after me, right? When you have that big of a following, that's what it is. I get it. I understand the game. But I don't die that quickly, I'm like a little cockroach. Like you gotta fight back a little bit. And I don't think he had the best response. Now he did end up responding like 5 minutes before I went live. So I want to read what he responded. And I kind of called him out under someone else's post. I was like, yeah, Sawyer's great, but he never responds to people. So then he finally became a big boy and actually responded to me. So I appreciate that, because if you're gonna start a little beef, we gotta keep it going. We gotta keep it going. Did you average down a bit? No, I didn't average down today. So what did he say? This is what he says. Okay. He says, all I did was share an Elon quote. I did not share an opinion like you did. By the way, I didn't share an opinion. My opinion was I've never heard him say this before. I don't know how that's an opinion. So far, that's the first sentence is incorrect. I didn't share an opinion. Objectively, I did not. I just said, hey, I never heard him say this before. That is a fact to me, unless you're saying I'm lying, but I really never heard him say this shit before. So he said, I was providing some context. The Elon quote I shared is not misleading at all. That's a claim without a warrant, Sawyer. So in an argument, you need a CWI, claim warrant impact. You don't have a warrant for that claim. You're just repeating what you said in the first place. You implied in your post that Elon never has said it was a long shot and has a low probability of success. I didn't imply. That's what Elon said. That is what Elon said. Elon saying in Q1 2023 that it was a long shot and was not a bet you can take to the bank means that probability of success is low. Now, this is where we get into the semantics of this stuff. And that's why I want to pull up the exact quote that he said. I'm going to pull it up because I quoted the exact paragraph of him saying it yesterday. And that paragraph, I think, is incredibly important to look at because, okay, here it is. I have it right here. I'll look it into a second because that paragraph actually digs a lot deeper into this. Okay, so he says, we've already known they've been hedging their bets on Dojo because they turned on a new NVIDIA GPU cluster in August of last year. Look at what Tesla's achieved with FSD12 with their current GPU clusters. I agree that Dojo is an important part of the investment thesis, but to jump to the conclusion that it's failing is a bit drastic. Again, this guy's just saying shit that doesn't, that's not what I said. I never said Dojo was failing, and I never said Dojo isn't important. In fact, Elon himself yesterday said Dojo is working. But he also said it's not going to replace NVIDIA. Remember, the investment thesis is not Dojo works. It's that it increases margins and decreases CapEx because they don't need to keep using GPU clusters from Jensen Huang. Okay? And so from that perspective, it's not saying that it's failing. It's saying that it's not going to create an opportunity cost that is beneficial to the upside of CapEx reduction. And so Sawyer's wrong on that. And he says, just because you interpreted something in a certain way does not mean that's the reality of the situation. This also I heavily disagree with because the entire stock market is about interpretations and what it is to be reality. PayPal does not deserve to be a $70 billion company if you look at the numbers, but the interpretation by Wall Street of that this company being incredibly, incompetent and having all these woke policies, that leads it to get to a bad situation. So when we talk about the stock market, Sawyer, perception and interpretations is absolutely reality, and we have to talk about that, especially when we're creating media about it. Only Tesla has all the facts. Yeah, and they did a great job sharing yesterday all the facts about how Dojo is likely not going to replace NVIDIA. Dojo is not needed to solve FSD, but the company would be better off if Dojo succeeded. Agreed. It is not needed to, he's saying shit that he I don't know why he's saying, this was not a response, dude. I'm sorry. And I'm not going to go back at him because it's not worth it anymore. But Dojo is not needed to solve FSD 100%. You can use NVIDIA GPU clusters, but guess what? When you use those clusters, you're paying a shit ton more money than you would pay if you used Dojo, which is why the Jonas Brothers band dude, Adam Jonas, a couple of weeks ago or a month ago said, hey, I'm increasing my price target to $485 because this Dojo thing is going to increase their margins. Even he was surprised yesterday when Elon basically said that's wrong. So now let's go to the actual thing about what Elon said, okay? Let's go to what Elon said. Now, remember, Sawyer Merritt said in this response that you implied in your post that Elon has never said it was a long shot and has a low probability of success. And he's like, in Q1, he did say that it's a low shot. Listen to what Elon says yesterday in Q4. So in Q1, he said it's a long shot. Now, let me read what Elon said yesterday and just tell me if there's a little bit of a difference there. Okay. So the AI hardware question is a deep one. We're obviously hedging our bets here with significant orders of NVIDIA GPUs, or GPUs are the wrong word. There is really there's nothing that can produce graphics like that. So that's what sort of graphic processing, neural net processing, or something like that. Yes, GPU is a funny word, like vestigial. And so a lot of our progress in self-driving is training limited, something that's important with training. It's much like a human. The more effort you put into training, the less effort you get from the inference. Okay, here it is. Sorry, I was reading the wrong one. So he says, but I would think of Dojo as a long shot. It's a long shot worth taking because the payoff is potentially very high, but it's not something that is a high probability. It's not like it's a sure thing at all. It's a high risk, high payoff program. Dojo is working and it is doing training jobs, so we're scaling it up and we have plans for Dojo, blah, 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 and whatnot. So I think it's got potential, but I can't emphasize enough. High risk. So I still think it makes sense, given that even if it's a low probability of success, that's not one low, that's two lows. That's Elon emphasizing high risk and emphasizing low probability by repeating those words twice. For the very high, I think anyway, I'm belaboring the subject. It's a very interesting program, but it's a low probability of success. Okay, why am I sharing that there? In Q1 of 2023, Elon said for 2 seconds, it's a long shot, but we should pursue it. In Q4, a year later, Elon's stressing, and he literally is verbatim saying, I cannot stress this enough. It is high probability, low success. So to me, like, yes, sounds like he did more or less said the same thing. I agree. More or less, he did say the same thing. But again, why is the stock down 12%? There are things you have to read into. I mean, why do we even listen to these earnings calls at the end of the day if we're not going to read into what people say? Like, if that's the case, then just buy your shares and just never watch a Tesla video again, right? The reason we're in this as day-to-day investors is because we're trying to dissect broader things that the CEO says, and the CEO of a multi-$100 billion company. It's very important when they say, hey, I can't stress this enough. This is probably not like something you should be hedging your bets on in terms of an investment thesis. He didn't literally say that, but you know what I mean? He's implying to investors that he's talking to, because it can fail. And when the CEO of a company is saying, hey, this probably could fail, you have to take that seriously in part of your investment thesis. And I don't think the Tesla Uber bulls really understood that, especially with how they responded to me. So that was my answer. That was kind of my answer to Sawyer. I mean, look, I respect the guy. I like what he says, but make no mistake about it. The Tesla Uber bulls are covering their asses today because the stock is down really badly. And I get it. I understand. It sucks to see your stock down that much, but we can't be delusional here. Like Intel right now up about 5%, recovering a little bit from 49 to 47. We can't be delusional. If Elon says, Dojo is the next way that we're going to increase margins, blah, 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 and then he says, yeah, I don't know if this is going to work. You got to really take into account that, well, all right, so he wasn't necessarily, upfront about this throughout the past couple years as he's been touting Dojo. And he has a history of this with FSD, dude. FSD is like, FSD hasn't come out for years and he's been promising that. Again, I'm bullish Tesla. I will be buying this dip. I'm actually very happy it's fallen. If it gets to 175, it's going to be a very, very juicy. But we do have to be objective here in terms of some of the stuff he says. So those are my thoughts. On what he said. B. Martin says, it was bad, but out of character to set reasonable expectations instead of outlandish promises. Maybe he felt this perception needed to be set straight. Yeah, and that's the other thing. Elon always has these outlandish promises. So I think Q4, the word of the day for that is like sobering. It was very sobering. That's what Gene Munster said as well, because it was just like him being realistic about growth, him being realistic about Dojo, him being realistic about the next generation vehicle that's probably not happening till end of 2025, him being realistic that the bot is not ready to like be shipped all across the world yet, right? It was a sobering call for investors, which creates juicy prices for shareholders. And for someone like me who hasn't really built out my position, I'm excited to buy some more, but it's going to take some time for it to get there. So we'll see when it gets there. But nonetheless, that was what we had on Tesla. Now, in terms of the actual dip itself, the reason it's down is not really just because of Dojo. It's definitely not because of my tweets about, what's going on with Elon and how Elon's talking about Dojo. It's because of margins. Margins did not beat Wall Street expectations, even though they beat quarter over quarter. So that was good for the company, but that was not good for, the perception of it. And then they didn't give guidance on volume delivery. They just said it was going to come back lower than what we thought in terms of the growth rate. But that's not tangible numbers. And I think the street really wanted tangible numbers. Dan Ives, I think you guys saw his tweet today. He was pretty upset about this earnings. Dan Ives said, and this is the other thing, Sawyer Merritt, this is also funny about Sawyer Merritt. He's coming at me because I'm significantly smaller than him. He's damn sure not coming near Dan Ives. Did you guys think about that? Like, why isn't he quote tweeting Dan Ives and kind of trying to dunk on him? Well, he's not doing that because Dan Ives is a much bigger name than him, but Dan Ives is saying the exact same thing I'm saying. Dan Ives says, we were dead wrong expecting Elon Musk and team to step up like adults in the room on the call and give strategic and financial overview of the ongoing price cuts, margin structure, etc. Instead, we got a high-level Tesla long-term view with another train wreck conference call. In my opinion, what they said about Dojo, even though it was honest, it qualified as train wreck to me because that is not how they communicated the value of Dojo over the past few quarters. Even if they might have said it here and there, it was not the sobering tone that they gave, And so Dan Ives agrees, Gary Black agrees. It was a tough earnings call. It was a very, very, very tough earnings call to accept, but it's going to create a juicy dip. And if that dip gets down to 150, then it's going to be a very juicy dip. And we'll see if it gets there. I'm pretty sure margins beat Tesla's quarter over quarter performance. They did not beat Wall Street expectations. Wall Street wanted 18.2. They did 17.6. You could say Wall Street's being unreasonable with their expectations at 18.2. But Wall Street is Wall Street at the end of the day. And if Wall Street is Wall Street, then, like if you don't beat Wall Street expectations, then you don't beat Wall Street expectations. You missed. So that's why I think Wall Street got kind of upset and we got it sold off. We had someone in the chat here today in the morning. There's some heavy players. I mean, we had someone in the chat who sold 200,000 shares this morning. So that's about $38 million of shares that they sold this morning because they were just disgusted by that earnings call. So again, like, I'm happy it's fallen because this is just a great opportunity. But I just think that some of the Tesla bulls just need to relax a little bit and be like, yo, Elon, he said some stuff that he never said before, and we got to deal with it. The growth was 38% in 2023, notably lower. Growth is 20 to 25% in 2024. Estimates should be around 2.2 to 2.3 million vehicles delivered. Yeah, hopefully. Remember the Germany factory shut down for a month, so that's gonna have an impact. But 2.2 to 2.3, that would be my estimate as well if it can get there. I sold a juicy Tesla put for January 2025 strike, 190 in premium, 32 a share. Oh wow, that's not bad. 32 a share. So what, you got 3,200? So you put up 19,000, right? 190 times 100. So you put up 19,000, you got 3,200. What's the premium on that? So 32 divided by 190. Wow, you got a 17% premium. Holy crap. So that means in January 2025, if Tesla is not 190, you get 17% of your money and you're locking up 19 grand for the next 12 months, 11 months, basically. And if you do have to buy Tesla at 190 minus 32, your actual cost basis will be 158. Yeah, that's not a bad deal. If you're bullish on Tesla, that's a phenomenal put to sell. Wow, that's not bad. That's not bad. And today was the best day to sell it. I mean, tomorrow it could decline more, but today was not a bad day to sell. 19K for 3.2K premium. Yeah, not bad. Not bad at all. That's a hell of a premium. It's not bad. Great maths. Thank you, ET. Great maths. Okay, PayPal. Let's discuss PayPal. All right. First of all, who was at the PayPal event and who watched the PayPal event? If you didn't, please put in the chat. I actually want to know how many people here don't know what happened at the PayPal event. Like, just put some comment because I don't want to literally repeat everything I said. I'm just going to do like a high level overview. Blue shirt for PayPal. I didn't think of that, but yeah, I guess blue shirt for PayPal. Watched. Okay, so we got a bunch of people who watched it. Look, here are my thoughts on PayPal. Guru Bob was with you all the time. Thank you, sir. I'm happy you were here. Namir, it was amazing. I can tell you're being sarcastic there. I was in the mood. I was in the room with Alex Chris. I wish I was in the room with Alex Chris. Okay, so the problem with PayPal is that these guys don't know how to do a presentation. They don't really know what it means to present an idea to the world. And you might be saying, Amit, you're just this random guy in his house, and this is a $70 billion company. Who do you think you are? This was one of the worst presentations I've seen of a new product offering ever in the history of me watching presentations. The reason I say this is because the expectations were built for this to be a meaningful event, an event that would infamously shock the world. Now, again, the things they announced were good, and we'll talk about that in a second, but the presentation of them, I think, hindered the psychological I guess euphoria that people had around this idea of shocking the world. And it was a recorded video. It wasn't live, and they just propped it on YouTube. The audio was screwy because you heard an echo. And, it was a highly edited video with a lot of corporate speak. It just wasn't natural to me. And you might be thinking, well, why would an e-commerce kind of payments company host a live event? They're not like a, Amazon, they're not a Google, et cetera. Like they don't need to encapsulate that much attention and do something that big. That would be overreaching. I disagree. I think when your stock is at 8-year lows and investors have basically written you off as like a dinosaur company that doesn't deserve any bit of a premium, you need to get people excited. And also, if you're the CEO of a company that went up 20x under your leadership over the past 19 years, and you come to a new company, you should bring an era of excitement to that company. And you can't just go on CNBC and say we're going to shock the world without actually shocking us by making us excited. And so I think the presentation could have been a lot more exciting, even if the presentation itself had some reasonable arguments that they put out there. It was a missed opportunity. It was absolutely a missed opportunity. Crossroads did a good job presenting today. Don't bring it down. That dude literally dreams in corporate buzzwords. Yeah. Look, so let's talk about I mean, let me just read my tweet because my tweet kind of summed it up really in a succinct way, I think, and then we'll discuss the implications of this. So the things that they introduced that I think were important, there's three kind of core things you need to know: Smart Receipts, Advanced Offers Platform, and Venmo Business Profiles. So Smart Receipts. This is really corny, but they're just like, hey, when you get a receipt from a PayPal merchant, we'll like offer you new deals in the receipt. And I know as I say that, it sucks, right? But that's why you needed to go live. You needed some interesting way to say what I just said without me doing the TLDR version of that and having people literally want to take their headphones off and be like, I can't believe this was the event that I'm listening to. And that's what it felt like. Okay. So that was the problem with the first one. But nonetheless, I think that's a cool idea. I just don't know how much it'll scale. Then the second idea, I am so confused about. I have no idea if it's going to work. The third one is the only real one I'm bullish on, but this is the second idea. Advanced Offers Platform. This is PayPal's version of an integrated app that basically lets people scroll through recommendations and buy their products. Think of it as like Shopify's Shop app. Their pitch here is that targeted advertising will be better on this product than other ones because of the data they have, and they will connect more merchants to consumers, which makes sense. It definitely won't hurt the company, but I'm not sure if consumers are going to easily want to shop on a new PayPal platform. Like, would you really go to the PayPal app or a new PayPal app that they're launching and start buying stuff through it versus Amazon or versus, Walmart if you're in the States? Like, I don't know. Best Buy, I don't know, dude. The deals would have to be amazing. They would have to be so good. And in this kind of inflationary time, I don't know if the deals can become like that aggressive. They can't do what Shein does, right? That Chinese company that offers you like 5 shirts for 3 pennies. They can't do that. A, because they don't have, Chinese kids and sweatshops making those products. But B, because they're just not that type of a company. They're not an e-commerce play like that. They're a payments company. So I don't know if this advanced offers platform is going to work. Philip says, was that when you did the shocked face? No, I did the shocked face when I realized maybe it was when I realized that this was, this is the shock face. It was when they were playing some stupid video and I realized that this is actually pre-recorded and not live. That's when my shocked face came out. We got Arnie. He put that out. That's when I was just like, dude, what the heck are they doing right now? But so I don't know if this AOP is going to work. We'll see what happens, but it's not that exciting to me at the end of the day. It's something that's cool, but it's not that crazy. So this is the part I really liked. Venmo business profiles and cashback offers. Cashback is ubiquitous everywhere in North America, but not across the world. So if you use cashback on Cash App or Bank of America or Zelle or whatever, you get like points and rewards for like buying stuff. Like when I was on the flight to California, I got to get free Wi-Fi with my United miles. Theoretically, it's like a form of cashback, right? Because you're buying their products and you get some rewards, all that stuff. So it is actually very exciting for them to bring cashback offers internationally because they have 400 million users internationally that might not have access to things like cashback. Venmo Business is going to offer SMBs the exposure to gain new customers via the dual-sided marketplace that is Venmo. Venmo is a network where people scroll to be able to see what people are buying and selling or as to how they're transferring money. And they're saying small businesses will be able to pay for ads on conversions, not impressions. If you're a small coffee shop, you can have a discount code through Venmo. If people use it through Venmo, that's the only time you pay PayPal for facilitating that transaction. If they don't use it, you never pay them. So you get the exposure and you only pay on the conversion. This could lead to even more advertising revenue on PayPal, kind of something like Uber is doing with their targeting ads. Like when you're waiting for your Uber, there's an ad that pops up. So kind of an idea like that. And more transactions on Venmo, leading to better transaction margins overall. That is kind of the core thing that they're trying to do. Okay. And so my thoughts were, I think this is a solid set of innovations for a company that hasn't cared to rebrand itself and introduce new products for a while. I just didn't like the presentation. I'm a presentation guy. I'm a public speaking guy. And I just did not like this. And I'll give my suggestions for how they could have presented it. But my final thoughts are, if the stock goes sub 60, I will buy the dip. I think fair value is closer to 90 if you do a basic DCF and assume they're going to do, 7 to 10% growth. And it's not unreasonable to assume more buybacks and top line growth if these new products actually work. That's the big if can get us there. But the big bet is on these products working. If you don't think they're going to bet, if you don't think they're going to work, don't invest. If you think they are, then maybe it is undervalued. Now, how would I do this this presentation? I would have literally just invited all the merchants that are using your products. They said 3,500 businesses in Seattle are using Venmo small business profiles in beta. They did a video with BigCommerce, which is this major corporation, and no one wanted to see them work with BigCommerce. Everyone wants to see like the local coffee shops, like get the praise and attention they deserve. Like no one wants to see Walmart have better conversion rates, dude. No one gives no one cares. But the local store that's in your neighborhood, do you care about them? So I would have invited 5 of them. I would have done an AIP con. I would have been like, hey, talk for 5 minutes each, 6 minutes each, talk about one specific version of the product we released. You know, we released Smart Receipts. This is a company that increased conversion by 60% on Smart Receipts. Give a 7-minute presentation. We're going to have 5 of you do this for AOP, the average advanced order platform. We're going to have you do it for Venmo, blah, blah, blah. And then everyone presents, and then Alex Chris kind of, you know, sums it up all together. And you let your customers explain how valuable this stuff is. And then you do the sort of business talk about how you can capture more market share by just being able to really capitalize on these innovations that they're putting out there. That would have been a really good presentation, in my opinion. It would have been really good. But that's not what happened. Dat Nijin, I'm sorry if I'm saying your name wrong, says, what did people expect a payment processing business to announce? LOL, honestly, these are solid, good value added features. It should improve PayPal top line. I agree, 100%. I did not think they were going to invent the iPhone. I just wish they presented it in a way that got more people excited. And maybe that wouldn't have tanked. Maybe the stock still would have tanked. But to me, the stock tanking today was just stupid. That was just investors being dumb. And that was just algorithms being dumb. Like, there was no reason for the stock to tank. What was needed was trust in the investor. And when I see a video like that and no real effort put into like really presenting your shock the world idea, I lose a little bit of trust. Nonetheless, it's undervalued enough for me to not lose enough trust to sell the position. So that's the only thing I would have wanted. Real Baby Pluto says it was a miscalculation to say shock the world. Other than that, I think it was a fine presentation. Yeah, I mean, look, and maybe that's the thing I'm hung up on, but you just can't be that adamant and then not follow through. It's tough, right? Under promise, over deliver. And the only reason I'm saying this is because your stock's in the gutter. If the stock wasn't in the gutter, then, you know, maybe I wouldn't care that much. But like when the stock's at a decade-long low, you can't mess this shit up. You know, you gotta really care about how investors are thinking about it. Oh, Kelly says, not sure you understand the point of the BigCommerce thing. They're saying the small merchants use BigCommerce has improved checkouts. BigCommerce is a joke, though. It should have been Shopify. Interesting. Okay. So their point of using BigCommerce was that BigCommerce is a vehicle for smaller merchants to be able to utilize their platform to improve checkouts. However, BigCommerce is a joke, though. Should have been using Shopify. Yeah, that's fair. In general, I just wish they had highlighted small businesses. Right? Like, in my opinion, when you're going for, and maybe this is just how my like presentation mind works, how my like mind thinks of this stuff. But even if the argument makes sense to show BigCommerce and like the 2-minute video they showed, it just went over my head. But you show me, you know, that 35-year-old, barista who used to be a barista. Now she owns her own coffee shop in Seattle. You show me that. You tell me her story. You tell me how she's getting 70% increase, you know, month over month for Venmo transactions in the local area, and it's more effective than Instagram for it. You show me that stands out, dude. That's like serious. So I just wish they went that route in the pre. I thought that's the route they were going. I miscalculated. I really thought that's what they were going to do, and they didn't. It was some corporate video at the end of the day. So it wasn't that fun. It wasn't that exciting. The small merchants using BigCommerce had better checkouts. Yeah. No, I get it now. So BigCommerce is not an e-com platform, or it's not a store itself. It's a platform for smaller e-com stores to be using their platform. Yeah. No, that makes sense. It's just, I just wish they actually focused on small businesses themselves. Himash Bat says, hopefully the next 2 catalysts give the stock a boost, trimming the org and a good earnings report. They are going to do layoffs. I mean, they did say that. I don't know when those layoffs are coming. Hopefully they come soon, but okay, that sounded so bad. I don't mean that. I'm just saying, hopefully, you know, they right size the ship. If you got to get rid of some people that aren't being productive, you got to get rid of some people, right? Like, there's too many middle managers, product managers, and tech companies that don't do shit all day. So if you got to get rid of them, then you got to look out for shareholders there. But they haven't made any official announcements for when that's going to happen. They just said, you know, they're looking into doing things like that. And every company is doing it. Spotify did it. Google's doing it. Some company today laid off, what was the big tech company today that laid off like 1,700 people? I'm forgetting the name, or 1,900 people. Oh, Microsoft in their gaming division. They got rid of 1,900 people. So, you know, pretty much every company is trying to do that as well. Layoffs and share buybacks alone should bring PayPal's share price up. Yeah, I agree. I think that alone is all you needed. Let's hear Josh Brown real quick talk about PayPal. I think he's long on this one, so let's see what he had to say.
A shareholder learning about this in real time.
Yeah, it's just the stupidest thing I've ever seen. It looks like market manipulation, but nobody wins. So why would you come out and say we're going to rock your world, or whatever he said, and then the big innovation is we're not investing in this, we're still cost cutting, but look, we're going to do a faster checkout. That's like table stakes. You have to have a faster check. We all understand that. There's nothing here. They should. I don't know. I'm not impressed by so far. It's a new CEO. Give them the benefit of the doubt. They report on February 7th. Maybe they will rock our world then. But like this is not what's popping in the streets. Like we don't roll like this. We don't say big things and then back them up with basically minor incremental improvements to existing products. That's a really weird flex, and that's why you're seeing the stock get traded this way.
Dude, he said, rock your world. We don't say this in the streets, and that's a weird flex. I love Josh Brown. I love Josh Brown so much, dude. I don't know why you bought Snapchat, but outside of that, especially bought it at $16. But I love Josh Brown. That is great. Speaking of Rock Your World, side note, that is a Justin Timberlake song. Justin Timberlake just released a new single yesterday called Selfish. And he hasn't released a new single in like almost 3-4 years. So if anyone wants to listen to that song, I'm not a big Justin Timberlake fan, but I do like his music. That's a song. That's out. If anyone, I was hearing a snippet of it, I was like, it's a good song. I like it. It's a good song. Nonetheless, look, I mean, I agree with Josh. This is you can't say you're gonna rock someone's world and then you really don't do it. Like you don't do it in the way you need it to. Granted, I think that the event was good. I just think it was built up so much, and then you're using big commerce to kind of prove your point about small businesses versus the actual small businesses themselves and highlighting them. Like that just it was so paradoxical to me that it didn't really resonate, at least not to me. Okay, here is let's get a little bit more update on Tesla. Here is Bryn Talkington. Wow, her name is Bryn Talkington. Her argument is Tesla is dead money for the next few months. Let's see what she has to say. That's a cool name. Bryn Talkington is going to Talkington to us. Okay, here we go.
Forget the stock name. They missed on expectations around revenues and earnings. So of the 10 or 11% it's down, that's probably a third of the reason. To me, the 2/3 reason, the other 2/3, is that when it comes to guidance for 2024, that margins, we're not sure. So Elon was being honest, but the market doesn't want lack of clarity and also volume growth. So I think the stock is down appropriately, being the lack of positive guidance, and they missed the reduced numbers to begin with. I think that as in like short term, the stock is in no man's land. You want to see that stock base out at 180. If it can't base that, you're going to be in the 160s. So, rule number one, do not buy a stock on a day like today. You have to see that flush out. As you know, I entered the stock around 120 and 150. I sold calls on some of those that got called away at a higher price. I'm just in the stock right now. I would look over the next couple of months. So I think it will be dead money over the next couple of months. Once things settle, I'm long-term bullish on the name. I think the manufacturing prowess is incredible. But right now, you really just can't touch this name because I think the sellers will continue and the price revisions are going to continue to come out the next couple of days.
I'm going to pull up the downgrades to show you guys, but it did get downgraded a lot today as well.
Brandon, it's Josh. Good to see you. I wanted to ask you what percentage probability you would place on the idea that there's going to be some other vehicle through which Elon Musk expresses his next generation technology ideas away from Tesla. Maybe it's at Starlink, maybe it's at SpaceX generally, or maybe something we haven't thought of, like the Boring Company, that he files an LLC and they're off to the races. Is that like a big risk, and what percentage probability would you place on that risk?
I don't think it's a big percentage at all, because there are like full self-driving ultimately is where the AI technology is. And so he talked about on the call, no other automaker saying, hey, can we license your full self-driving? That is where all of the AI technology, that's where all the amazing engineers there. I think that is a low probability. To put some context, Josh, on your comment about what he said the other day about maybe I'm not going to be interested in doing AI or new projects here because I don't own enough of it. He was asked about that. And what he says is that, and I get it, but I mean, he sold the stock. He said, I don't want to have control. I want to have influence, because I don't want an activist shareholder who knows nothing about the name, except for it hasn't done well over X amount of time, coming in and exerting more control than he has. So I think over the...
Yo, I just put something together. Maybe the reason, and this may be a stretch, but let me know what you think. Maybe the reason Elon is so obsessed with having this 25% voting control power is because he knows the company's not going to perform over the next 12 to 18 months. and the stock's going to be dead money, as Bryn said. And then activist investors might try to come in and take over the company. Is that crazy to assume that he's projecting, oh crap, we got a lot of macro problems. Stock's probably going to be dead money for a while. I know this. And, you know, like the investing community may not believe this yet, but I know this. And yesterday we saw, you know, how tough it was. And if I don't get earnings control, if I don't get voting control soon, this is going to be like a Disney situation where Nelson Peltz wants to try to come in and like, you know, maybe because if Tesla's dead for like 18 months in terms of money, I mean, you never know. There might be some activist investors that just swoop in and they try to do what they need to do. Is that crazy to assume? Is that crazy? That's a stretch. You guys think that's a stretch? I mean, I know he wants control in general, but why now does he want control? You know, that's kind of my question. Maybe it is a stretch, but if anything, it definitely is not a downside for him to have that 25% if the stock is dead money, because then he has control from, you know, activist investors coming in and doing some stuff. Okay, here are some of the downgrades on Tesla. Then I'm going to play another clip. So these are the downgrades we got. This morning. So Craig Hallam downgraded them from $50 to $48. Who the heck is Craig Hallam, dude? Or is that a bank? Wow, that's interesting. Or is that a different stock? Yeah, that's a different stock. Never mind. It's a different stock. I was like, what? What is he talking about? Okay, so here's the Tesla ones. So we got 225 from UBS, 220 from Goldman, 224 Citigroup, 270 Mizuho, 225 Barclays, 224 Canaccord, 200 Wells Fargo, and 180 TD Cowen. So all of these guys have either neutrals, some buys, equals, and all of them around that 220-ish range. Dan Ives has the highest target on the street at 315, and that came down from 350 today. So he went down from 350 to 315. Okay, let's take another clip about margins.
Shares moving lower this morning. Fourth quarter revenue and profits fell short of expectations, and the company says that vehicle volume growth will be, in their words, notably lower in 2024 compared to last year. Joining us right now is Colin Langan. He is Wells Fargo equity analyst. And does this come as a surprise to you because the street is selling the stock down today?
I mean, I think yesterday we got a bit of a trifecta of bad news. You have the comment on deliveries. I don't think that was as surprising. I mean, we kind of could see demand has been slowing a bit. I think the margin commentary was a bit of a surprise. They talked about sort of hitting a natural curve limit on bringing costs down. It's a big problem because they just cut pricing in China and Europe a couple weeks ago. So if you can't bring costs down, those pricing just hits your margin right away. So it feels like margins are going to come down next year, very likely. And then he also didn't back away from the comment about trying to get a 25% stake, which raises concerns about dilution if you're a shareholder here.
What do you think in terms of whether it's more important to have not get diluted, or to have Elon Musk there developing AI at Tesla? How would you come down on that?
I mean, the stock trades where it does because you're not paying for the core auto business, you're paying for the future ideas, and that is Elon Musk. But it would be pretty frustrating, I think, as a shareholder to, have to sort of dilute yourself to keep him around.
You've got a hold on the stock right now. 190 is where it's trading. In terms of the other big automakers, though, you like them less. Ford and GM, you have a sell on both of those stocks. Why?
I mean, I think the traditional auto, the industry is challenged right now. I think even what Tesla's talking about is right. Their demand is slowing. Pricing's probably coming down. Those effects are going to affect the Detroit 3 as well. They just haven't seen it as much. So I think we have pricing headwinds. We have capacity has grown way too much, partly because of all the capacity Tesla has added. And we have EV regulation issues for the traditional guys. So they're going to have to figure out a way of trying to maintain margins as they sell more unprofitable EVs. Which is just a structural challenge for them that I don't think they're going to be able to meet.
That's a pretty bleak outlook. What would change your mind? Is there anything that could happen over the course of this year that would make you think, okay, maybe there's a time to look at it again?
I mean, evaluation always matters, obviously. I also think, we'll have to see how the politics shake out. I mean, I think if you have a Republican, there's more likely some of the aggressive EPA legislation gets pushed out. I still think that's a problem through 2026, but I'd obviously be less bleak beyond that.
Okay, so you guys get the picture. Tesla margins, volumes, just not enough for the street to get super excited, and that's why we have a Tesla dip. So Intel right now down about 7%. Intel earnings weren't horrible, but that guidance I don't think was the best. Tesla right now up a little bit after hours, 182. Here's a stock. This is the last segment I want to do, and then we'll end it out for today. IBM. IBM. This has been a name that has not been talked about, I think, in a very long time. And well, why are people talking about it? Because they're at levels, they're up 34% in the past 3 months. And look at that green candle. I mean, it's a thick green candle. So let's look at the 5-year on IBM. Okay. This is why people are excited about IBM right now. IBM got to a low of 75 in March of 2020, and it rebounded back up to 132. And it basically hovered there for a while, right? I think it hit 145 very like briefly. Then it went right back down to 117 May 2023. Now it's at 190. Okay. It's at 190. Why is this happening for IBM? I'm looking at their earnings right now. Revenue grew 4%. Profit margins are up 1.4%, 59% or 59.1 on a GAAP basis. Full year revenue is up 2%. They did $61 billion in revenue. Cash flow is $13.9 billion. Free cash flow of $11.2. It's not like these numbers are amazing. I mean, this is like 2 to 3% growth on pretty much every metric the street cares about. But I think they said something in the earnings. I'm reading it right now. I have to go deeper into this, and probably tomorrow I'll have better analysis here. It's not like their guidance changed either. I think they've made some claim about AI integrations via the cloud. That is what's getting the street really excited right now. They're laying off people. Yes, they're laying off people. But I think, and I'm reading this report, I can't really find it right now. I'm trying to see if there's a good quote. But let's take a look at this clip. Maybe we'll get some clarity here. It seems like it seems like AI and cloud is what's getting the street excited. And maybe they're a name that's not as expensive as some of the other guys that have run up like NVIDIA.
IBM rising more than 5% in overtime after their earnings report beat estimates. Joining us now to discuss is Evercore ISI's Amit Darinani, who just last week upgraded his rating on IBM from inline to outperform. Your timing was great. Stocks up after these results and this beat and stronger than expected free cash flow. I do wonder what you think, though, about the fact that it looks like software revenue missed expectations slightly, consulting missed expectations slightly, but infrastructure was so much stronger.
Yeah, well, I guess it's better to be lucky than smart sometimes. I'll take that with upgrade timing. Listen, I think in terms of numbers, you're right. I think there are two parts to focus on. One is the mix of what drove the December quarter performance, right? Software, I think, will be crucial to understand. Red Hat seems to have decelerated a little bit further. Was that a macro issue or something else that drove it? And then infrastructure, in all fairness, is a surprise in terms of how well it's doing. And so durability of that will be key. But I'd say overarchingly, the biggest driver why the stock is acting the way it is the free cash flow guide for next year is $12 billion, and that's close to $1 billion ahead of what the street was modeling. And I think that's what surprised everyone so far.
And we've been talking about the fact that this name has moved so dramatically in the last couple of months as a stealth AI play, if you will, that's maybe not so stealthy. The market's finally starting to catch on and embrace that narrative a little bit more. How do you think IBM is positioned as we do head into 2024? What do you expect in terms of that commentary and what it's going to mean for its different businesses in this new year as well?
Yeah, listen, I think this is going to be the focus for the company over the next 12 months, maybe even longer than that, right? What I'd say is the analogy I would have is just the way Accenture and consulting companies did really, really well a decade ago when you went from on-prem to off-prem workloads. I think IBM consulting is equally well positioned, if not better, as you have to start deploying these AI tools into enterprises to drive productivity, right? This is going to be really hard. You're a Fortune 500 company in a boardroom. I think IBM might be the consultant you have to choose, right? Our gut is this is what's going to scale up. I think you'll see it in consulting first, but it doesn't end there. I think you'll see it in software and hardware as well. But certainly consulting is where you'll start to see the AI revenues ramp up again through 24 and potentially beyond that as well.
So, I mean, when does the test really get challenging and investors get to understand whether that's going to happen? Because infrastructure, a lot of that's Z, it moves in cycles. I think we're expecting that to be, slowing down more than it was. It's really going to take software and that pull through from consulting to really continue working for this to keep revving, right?
Absolutely. So I think we'll start with consulting, and probably the first place where you see it, John, is the signings numbers. How big is AI becoming as a part of that? How fast that is doing? That's probably the first place where you see it. And then on software, you're right. I mean, you'll see it on the Red Hat side where they're trying to lever that up very aggressively. But the other part of the business too, if you look at this transaction processing platform.
I just realized this dude's name is Amit. I was looking at the chat. I was like, what are you guys saying? I'm like, oh, wait. This guy's name is Amit, dude. I had no clue. Oh my goodness.
which is up 4 or 5% this quarter. This is a place where they basically are selling mainframe software, and it's a duopoly between them and Broadcom simplistically. And I think they both are raising prices rather consistently, and that's another lever that's driving better growth going forward. But AI, I think, will be first on signings in consulting and then eventually on the software side.
Okay, so it's AI. That's the thesis. It's fucking AI. You could have said that last sentence and saved us the time. It was AI. That's why the market's, dude, AI is crazy. This is why even if Palantir is overvalued because of the growth, as if they just show some growth, those two letters are going to take them to a very happy place. Those two letters changed everything, dude. A and I. That's it. That's all you needed. That's all you needed. I mean, that's why the PayPal CEO kept talking about we're leveraging AI. It's like, dude, you're not leveraging AI. You're fucking. It's the same data you've had for years. There's no way AI is making it that much better. Like, come on now. But yeah, that's it's AI. That's why IBM's up. Now I do want to go in all seriousness. I do want to go deeper into what they're doing in AI and cloud, because I wouldn't buy IBM. I wouldn't touch it, just given the history of that stock. But it is interesting that if that sector is going up, what does it mean for Palantir? You know, what does it mean for the AMDs and NVIDIAs of the world? Are semis down, by the way? Intel was down after hours. AMD is down 2%. Okay, so you got AMD falling on that earnings. NVIDIA down a little bit, 0.29%. ASML down a little bit. And then you got, what's the other one? SMCI down as well. Yeah, so in Intel, they didn't tank the other guys, but they definitely brought a little bit of them down as well today. Looks like hair is not permanent for Amit. I think I'm going to lose my hair when I'm like 50, because that's when my dad started losing his hair. So I have till this is why I was wearing the hat, dude. This hair gets crazy. I have till I'm 26. I have 24 years. That was great math, by the way. 24 years until I lose the hair. You guys see the sweat under my armpits because I've been streaming all day. It's just been working. And we got another stream. We got another stream at 7 p.m. Sorry, not 7, 6 p.m. So an hour from now, I will be talking Intel earnings, AMD, NVIDIA, Dojo versus Tesla, or Tesla Dojo versus NVIDIA with my guy, Jose. We'll be doing it live on the channel, last stream for the day. And that will be all for semiconductors. So that's a semiconductor podcast we're starting today, once a week. Kelly says, your hair doesn't look as dry as it usually does. Have you been using that conditioner? No, I ran out of it. So I need to order another one. I ran out of it like last week, I think. I remember last Wednesday was the last time I used it. So yeah, Kelly recommended me this like amazing, I don't even know what it's called, but it's like this brown bottle from Amazon that's like, was it $40 for a little small bottle? But it worked amazing, dude, on my hair. It was just conditioning like the conditioner I used is a shit from Walmart. Like, she recommended me some like name brand shit. I was like, oh, there's other conditioners outside of like the ones from Walmart. So that was good. It was Bumble and Bumble Deep Conditioning Mask. Yeah, this is what we had. Jay Schwa says, starting to lose hair at 50 is as lucky as a male human can get, or did you mean to be bald by 50? No, I think starting, because when I look at pictures of my dad, by 50, he's like, you can see the bald spots, but it's not gone. Now he's 60 and it's like pretty much gone. So I've got 20 good years, I think, of keeping like 45-ish. We'll start seeing it. I mean, I already have gray hairs, dude. They're popping up there because, you know, when you got just like, I guess like stress or whatever, you tend to get some more gray hairs. Like I do have like little, no, they're not gray. They're like brownish. I don't know. But I think I have until I'm like 45-ish until the hair starts falling out and like there's like bald spots. But until then, the beard and the hair should be okay. Sephora stocks are pumping now. Oh, broccoli, your wife uses what Kelly suggested? Wow. So it actually is it's a Sephora brand. Okay, so it's a legit brand. It's a legit brand. Do you have a stake in this? No, it's not a sponsorship. I don't have a stake in that thing. But it worked. It was actually good for my hair. It was good. Because I don't have like all these skincare products. Maybe I need to get deeper into it. I've just never cared about it. But I've never really struggled with acne or pimples or like that. I've always been okay. And I have a beard. I mean, I get my shape up, so it covers up a lot of my face. So I never worried about it, but maybe I do need to start doing those a lot more. I see these TikToks of girls with their nighttime routine and they like do 17 different oils on their face. And I'm just like, all right, I've never done that before. I go to sleep. That's my nighttime routine. I knock out. So, okay. I think that's it for us. We're done today. See you guys at 6 p.m. And yeah, exciting day. Tesla PayPal got into some beef today. That was fun. I enjoyed it. I like it. And look, I didn't start it. He started it. He wanted to quote tweet me. All right, Brody, I'm going to quote tweet your quote tweet, and I'm going to respond to your quote tweet. You know what I'm saying? If you want to start the beef, we can start the beef. I said what I said. You said what you had to say. I disagree. I don't care if you have more than 20x the followers of me. I'll fight back. And also, I felt it was a moral obligation to fight back, dude, because you can't have 600,000 followers and try to dunk on me. And then like that to me is like just that to me is like getting all your minions to go after me, because he wasn't being obnoxious with his dunk, but the way he was doing, like, he didn't need to quote tweet it. You know, the dude could have DM'd me. The dude could have responded. When you do a quote tweet, it is a very, specific thing on Twitter of how you're trying to like make an argument. And I took that personally. Cue the Michael Jordan meme, right? I took that personally. Dude, I was at Wawa. I was driving. I was texting Kelly when this happened. I was driving, and then I stopped to get out of the car, and then I got the notification. I'm like, oh, he wants beef right now. Like, I don't know if he watched that Emmy award-winning show on Netflix, but he wants beef right now. If he wants beef, he's gonna get some beef. If he wants to, because in the broad scheme of Twitter, I'm not as big as him. He's a very, very big guy. Dude, that tweet, when he quote tweeted me, got like 3,000 views in like 20 seconds. It was ridiculous. That's how much reach this guy has. So we had to respond. Harmsy says, don't lie, you loved it. Look, I'm not gonna say I didn't like it. Love is a very big word. Granted, I like the attention. You could probably say I was in love with it, not even that I loved it. But it is what it is. When you come after someone, you got to respond. You got to respond. Kelly says he's a content creator. Admit it's probably not that deep. He just saw an organic opportunity to pump out some content and went for it. Nah, bro. Yeah, it's still, if you're gonna do that, you better be ready to respond. And that was my biggest beef with him. He didn't respond. And so I tagged Gergevin. You guys know Gergevin, the other financial creator. And I respond. Gergevin's for some reason been responding to me a lot more recently. Like, he likes my shit when I respond, all this stuff. He just hasn't followed yet, but he responds every time when I comment under his shit. And I was like, he said, oh, all these Tesla investors unfollow me by the hundreds every time I mention anything bad about Tesla. And it's like ridiculous because they're not objective. And then I was like, yeah, and they don't respond to you. And then he tagged Sawyer Merritt, and then Sawyer Merritt finally responded to me. And so that's how we got him to respond. But that was fun. It's fun. Granted, yeah, it wasn't that deep. Obviously, I'm just making a joke out of it. It's just content. People are going to forget about this literally in a couple hours, because like the way content moves is just so quick. That's my one advice if you want to start Twitter. You need to be tweeting so much, because like Steve, guys, this is the last thing I'll say. Steve called me last night. He called me and he said, Amit, I need to like ask you about something. I'm like, dude, I'm about to get on the treadmill. I can't talk. And he's like, just call me on the treadmill. I called him on the treadmill, and he's like, I'm thinking of this tweet. And he's like, I'm going to tag Kathy Wood. I'm going to tag Elon Musk. I'm going to tag Patrick Bet-David. I'm like, Steve, they're not going to fucking see it. It doesn't matter. He was like, no, but I'm going to like use hashtag Tesla. And I almost like started crying, laughing. I'm like, Steve, that's not how Twitter works. Like, maybe on the off chance those guys will see your tweet, but they have billions of replies in their notifications. Like, they're not going to see your proposal for Elon Musk's voting class shares. So I was like, just tweet it, dude. Just tweet it. At the end of the day, it's controversy. It's publicity. People forget stuff here and there. Now, you don't want to create a reputation, right? So you want to balance yourself. You don't want to always be ideological one way or the other, but you want to build content that's meaningful and at the end of the day, entertaining. And sometimes people debating, it's entertaining. And so me and Sawyer getting into a little debate today. By the way, we're both bullish on Tesla, so it's not a ridiculous, Gordon Johnson type of thing. It's just like we're bullish, but we disagree on how Elon acted on the earnings call. We have a debate. It's fun. That's it. Steve's idea was pretty good. It was, but he was so scared to tweet it because he was like, I'm tagging Elon. I'm like, Steve, don't worry. You can tag Elon. He's a big boy. Even if he sees it and he doesn't like your proposal, it'll be okay. Like, you just got to tweet. That's it. Okay. That's it for me, guys. I'll see you guys in an hour. Thank you all for joining here. Semiconductor Podcast in an hour with Jose. If you're interested in all that stuff, we'll be here live. And yeah, I'll see you guys, Finance Junkies, at 9 p.m. later today. Bye, everyone. Have a good one. Good night.